Hey guys, what's going on? My name's Adam, and first of all, I just want to say thank you for being with me as we pass that 100 subscriber mark. I know there are more things to come, but I think this is just a huge milestone, so I just want to say thank you for sticking it out and being with me. And before we get into this, I'm just going to be talking about the four stocks which I'm either buying or holding as of August 2020. All right, so the first one is Berkshire Hathaway. It's basically an American multinational conglomerate holding company. And the CEO of it is, of course, Warren Buffett, probably one of the most famous and arguably the most intelligent investors in the, 20th and 21st century. And so it's basically like holding an ETF, and the stock has obviously gone beaten down like every other stock in the pandemic, lost, around like 30% of its market share, but now it's, back up since its lows by over 23%. And so the reason I like this company, especially now, is because they're about to report their second quarter earnings sometime soon. And I think that, because Apple and Amazon did so well, and those stocks have shot up, Berkshire Hathaway owns some of those stocks and it has a very large percentage of its portfolio invested in those stocks. So therefore, when it reports its second quarter results, it's going to be good, and most likely this stock is also going to shoot up. So I just like this stock because it basically exposes me to those tech companies and also other companies like Bank of America, which Berkshire Hathaway just recently invested in, without having to actually buy all these individual shares, right? So again, I think Berkshire Hathaway is just going to be a beast, and it's going to continue to be a beast even when Warren Buffett passes away, since he's a bit older. Okay. Second stock here that I like is Nordstrom. So it's an American luxury department store chain, so it caters more towards the upper middle class, I would say, focusing on, it has departments for clothing, footwear, handbags, jewelry, etc. But then it also has its online store, which is, being more and more useful during the pandemic. Of course, this company has been hit pretty hard during the pandemic. As you can see, the 1 year chart, bottomed out at like $13, and it's like pretty near its 52-week low at, I think it was traded around like $12.50 a share. So it's still relatively low. It hasn't had much of a recovery. As you can see, this stock also has taken a huge beating the past 5 years, trading from around like $80 a share all the way down by 81%. When it's currently trading at $14. So I think anything below $15 is really an amazing buy for Nordstrom. I haven't bought any shares yet, but I think I will in the next few days. Okay. And if we look at across department stores, we can see as of, I think this was in like 2015, um, it shows that it's like the most popular across Facebook, Twitter, and Instagram. However, this is outdated news, but I also think you can't compare Nordstrom with something like, a Kohl's or a Macy's that cater towards a different market, right? Different demographic, if you know what I mean, right? As we can see, the financials, so second quarter of 2020 got hit pretty hard. Did 2.1 billion in revenue as compared to 4.5 billion in revenue in first quarter of 2020. Of course, they got hit hard by the pandemic, and they are basically operating at a loss of negative $813 million, and that's not good news. But again, as they're transitioning more towards an online system due to the pandemic, they're going to take some losses as they do that, right? Um, so I mean, this is partly the reason why the stock has been beaten down so much. But I think they don't have a very high chance of going under. I think if anything, the more lower end retail stores will go under before Nordstrom does. And of course, if the other department stores go under, this gives a chance for something like a Nordstrom to take up higher and higher market share, right? So I see this maybe as even good news for Nordstrom. But I do think they will weather the pandemic and will come out to be above a $20 stock, right? So I think I'll add more to this, or I'll add to this position, or I'll start this position this week sometime, okay? Next thing I'm thinking of is Brookfield Renewable Energy. So basically, this is a company that operates as one of the world's largest publicly traded pure play renewable power platforms. So their portfolio consists of hydroelectric, wind, solar, and storage facilities in North America, South America, Europe, and Asia. Um, and so I think like as um, politics and the environmental movement evolve, more people are coming to only be able to vote in candidates, even in Canada, liberal candidates um, that have an actual environmental plan in place. And same as if in the upcoming election, Biden gets elected, he will most likely have some sort of, he's more environmentally conscious than Trump, right? And again, a lot of investors are now, or a lot of voters are now only considering candidates that have some sort of environmental aspect to it, right? And so I think, that's probably one of the main reasons why the Liberals in Canada won for this past election, right? So as renewables are becoming more and more important, and gas and coal are being phased out, one, because of the pandemic, so that already decreased demand, and two, because oil will eventually run out. Renewables will take its place, right? And of course, more and more people are becoming environmentally conscious, right? So, as being one of the world's largest publicly traded pure play renewable power platforms, I think it gives it, I think this stock is really a good investment for the long term, and it pays out a dividend of about 4.35%. It also has some exciting news, namely the merger with Terraform Power. So basically, earlier this week, or of last week, Terraform Power shareholders voted in favor of merging with Brookfield Renewable Partners, which already owned a 62% interest in the renewable energy producer, right? So, and then that transaction officially closed last Friday, okay, sending shares of the newly merged company higher, right? So, as you can see, they're taking over other companies, or they're merging with other companies, making this one even a larger market cap. So already has like an 8.25 billion market cap, pays out a nice dividend, and I think over the next 10 years this is going to be more and more of an increasing solution to investors who are looking to invest in something that's maybe more environmentally conscious than something like an ExxonMobil that focuses strictly on gas and gas output, right? And if we look at their financials here, you can see that, okay, last quarter of, so this is yearly performance, they're sort of increasing their revenue, except from 2018 to 2019. But again, if we look at their quarterly performance, they have been affected by the pandemic. But again, still the general trend is as they come out of this pandemic, they'll sort of increase revenue, increase the amount they can pay out in dividends. And again, as people become more environmentally conscious, this is going to be a stock that I think will benefit from that move, right? So the next stock is a stock that I already own and has shot up since I've owned it by about like 8%, and this is Kirkland Lake. So this is a stock that's basically at its all-time highs right now, if you look at even like the 5-year chart, and it has had, so the reason I own this gold stock as opposed to the other gold stocks I talk about in my previous video on Kirkland Lake, but basically it has very high operating and profit margins, and is a company that I think, of course, is going to benefit as the gold price is basically at its highest ever, right? So we look at, the last time gold was this high was 2012 after the 2008 financial crisis, and gold is basically seen as a safe haven for investors. So basically now in 2020, as gold reaches its new highs, right now it surpassed the $2,000 mark a couple weeks ago, but right now it's still really high. Basically, Kirkland Lake will profit from that because they'll be able to sell the gold at a higher price, also increasing their profit margin. And also, a famed investor, Ray Dalio, says gold will be a top investment during the upcoming paradigm shift for global markets, right? So that's also another reason why, gold is going to be a good play. Well, not only is gold going to increase, but, due to this paradigm shift for global markets, there's going to be an increase in demand for gold as economic uncertainty about the pandemic looms, right? And as well, not only does he say that, but also if we look at in his portfolio, gold is one of his highest positions. He has 11.9% invested in gold, and as we go down, we see he has another 3.5 invested in these other iShares Gold Trust, right? So again, not only does he talk about how gold is going to be beneficial to hold in the future, he actually owns a large percentage of his portfolio in gold, right? So whenever, something that Ray Dalio or Warren Buffett says, you should, probably listen and, take a hint, right? So overall, those are the 4 stocks that I'm looking at and I'm buying. So Berkshire Hathaway, I own. Nordstrom, I'm looking to increase my stake in it or to start a stake in it. Brookfield Renewable Energy, again, looking to start a stake in it. I want it to come down a little bit, especially after the news of merging with a company, but still. And then Kirkland Lake's gold, of course, something that I already hold and has been good to me, and I think will be good to me further down the line. Okay, so thank you for listening to me. Again, if you like this video, please like and subscribe. Make sure to turn the notifications on so you can get notified whenever I release a video. And have a fantastic day.